Oh my God, they finally did it. And by it, I mean the Bank of Canada finally decided to cut interest rates by 0.25%. While this may not seem like a lot, it's going to actually have a huge impact on the real estate market moving forward. And before we get into that, welcome back guys to this channel. My name is Jared White with White Ridge Mortgage. And today we're talking about why the Bank of Canada cut interest rates and how that actually affects you as a homeowner or someone looking to buy a home. Please subscribe to the channel and like this video and ring the bell to be notified. Let's not waste any more time. Let's get right on into it. So why did the Bank of Canada decide to cut interest rates? Well, it all has to do with the big news that came out last week that outlined how Canada's economy is not growing as much as we expected. In the first 3 months of the year, our economy grew only 1.7%, and we hoped it would grow about 2.2%. And in fact, the Bank of Canada actually believed it would grow about 2.8%. The smaller growth is a big factor in why they decided to cut interest rates, and lower rates means more spending, which helps the economy grow faster. It's actually quite basic when you think about it. When the economy grows slowly, the Bank of Canada typically lowers interest rates because lower interest rates make borrowing cheaper, which encourages people and businesses to spend more money, which then helps the economy grow. What the numbers showed is that the first part of the year, people spent more money on services like phone bills, rent, and plane tickets. However, they didn't really buy a lot of goods like cars and trucks. Now, additionally, businesses spent more money on big projects, especially in oil and gas, and bought more machinery. In the housing market, more people bought homes, particularly in places like Ontario and British Columbia, but oddly, prices in those areas actually went down a little bit. Another factor they considered is that people aren't actually spending their money. They determined this by noting the savings rate is actually up 7% this year compared to last year, which is actually the highest it's ever been. And this is mainly due to people making more money from their jobs or investments. Now, enough with why they decided to do it, because at the end of the day, it's already done. But what does that actually mean for you as a homeowner or a home buyer? To start off with the homeowners out there, if you have a variable rate mortgage, depending on whether that's an adjustable rate mortgage or a static variable rate mortgage, your interest rate will go down 0.25%. This will result in a lower monthly payment on an adjustable rate mortgage, and if you have a static variable rate mortgage with a set payment, you might actually be paying down some of your loan now. Now, if you have a fixed rate mortgage, this interest rate announcement will actually have no effect on you whatsoever. So sucks to suck, but to be honest, you're probably in a much better position to begin with if you chose fixed a couple years ago than someone that chose variable. Now for where things get exciting. What does this mean if you're actually looking to buy a home? Well, you better get prepared soon and get your pre-approval in order because it's gonna start getting a lot busier out there. The reason is quite simple actually, and it makes a lot of common sense when you think about it. It all comes down to simple supply and demand. When interest rates go down, people qualify to borrow more for a mortgage, and the payment on that mortgage is more affordable. Therefore, you're likely gonna see more buyers enter the market, all while there being the same amount of supply there as before. And this will result in a lot more competition. Now, we've all seen what more competition does in BC and Ontario, and unfortunately, it typically means bidding wars. And this is a terrible situation to be in as a home buyer because not only will you might have to buy a home at a premium, but you're not gonna get the best terms as well, and you won't have enough time to do your due diligence because you're competing against people that are essentially putting in subject-free offers that don't care to do inspections or have a subject to finance. Now, the good news is there still is time, and if you're serious about buying a home this year, there will be a link in the description where you can book a call to start your pre-approval process. It is 100% free, and we work all across Canada, so we can get you set up with a detailed report on what you're qualified for and all the costs that there are to be aware of. That way you can make an educated decision, and we can actually do that quite a bit faster than you might expect. And if you're not interested in that, no worries. I hope you got some value out of this video. Please hit that subscribe button, like this video, and ring the bell to be notified. It does go a long way, and it really means a lot to me. Other than that, catch you guys on the next one.